You are now tuned in to the excellence of execution, welcoming Paul, DF, and your co-host, Marley.
What better way to kick off or start season 5 than with the biggest iconic figure in the broker channel?
I'm a little nervous.
Me too. Well, that's how we got Marley here, to calm the nerves. And look at that scarf.
I know, I said the scarf earlier.
Should we call him as like the iconic figure of the broker channel, or just the lead singer of your favorite band?
Of the band?
Subprime. Like, he's just looking at me. That's the same look he gave me when he first met me.
It's a good question, because very strangely, as we were doing the road shows and announcing that I would be retiring from the bank, one of the most asked questions was, what happens to Subprime?
Right.
I was just about to ask, really, before the podcast started, is Howard Chuck happening and is Subprime performing?
Those are two really good questions. So with respect to Howard Chuck, I don't believe that there will be a Howard Chuck tournament in name this year in either Muskoka or Winnipeg. That's a decision that Crystal Howard Chuck, I think, has taken. But I believe that, notwithstanding that, in Muskoka, in the same time slot that we would have booked, Andrew Jackson is planning an alumni tournament, and I'm hopeful that that SMA will still participate. But I know that Andrew's been reaching out to a number of people who've attended in the past, and they've been committing foursomes. So there will be a Howard Chuck kind of tournament, but not in Dale's name. And that's sad for me. But we had a 20-plus year run with Dale in Muskoka and almost 15 in Winnipeg. So, wow. Those things run their course. Howard Chuck Strong will still carry on. And I think that this tournament, from speaking with Andrew, will continue our commitment to Easter Seals. And through that tournament and other endeavors, we've been one of the largest benefactors of Easter Seals in Ontario. So I'm glad we'll be able to keep that going. So that will happen. Subprime is interesting in that after my departure, it was announced that Mike Dier has taken on the leadership of Mortgage Architects, replacing Dustin, and that's starting pretty soon. And so when that happened, I think that question got asked multiple times. So is the band breaking up? And I actually think that within the band, we were kind of having a bit of a moment, because Greg Tkach, our bass player and co-vocalist, has his own band and has had for many years in Etobicoke. And then we found out, without being told, that Brian Samuel, our lead guitarist, was auditioning for Greg's band.
What?
Yeah. So then all of a sudden, Dier and Gary.
On the cover of a magazine. This is up Marley's alley here.
Greg is saying things like, "I never thought the band would break up," and so I had to settle them all down. I said, "Listen, it may be that we won't get invited to play SMA or Scotia events anymore. Right. Maybe we will, maybe we won't. I don't know. That'll be a decision for them. If they wanted to have us, we would certainly be willing to do it. But we had a number of gigs already lined up, which sort of surprised me, including some brokerages in Calgary, the West Coast, that asked us to do it. And we said, as long as it has a charitable purpose, we'd be willing to consider it. And so I was a bit surprised that they were thinking that now, with my being retired and Mike moving on, that the band was breaking up. And so anyway, we've settled them all now down. We're going to have a band camp soon. I think we'll probably play the tournament on June 12th. We owe a place in Westport called the Cove another performance this year that we put off. We were supposed to do it last fall. We said we'd do it in the spring. So Subprime will be there, and I'm hoping that your organization, in terms of the DLC and the associated companies like Mortgage Architects, will be inviting us as the house band.
So here's no. So I was going to say holiday party, but there's no charitable component.
Okay, golf.
The golf tournament, yeah.
Maple Financial is going to be there. We'll get into that as well. But we want you guys to perform at our golf tournament
on the 19th hole.
Absolutely. No, we're
when the sprinters come on.
No, absolutely happy to do it. Though we're not going to use at my party at the Bottom Line. I don't know if you saw the guy we used for the roadie. We had him at the Hockey Hall of Fame event as well.
Yeah.
Yes.
You know, the guy that was walking around with his shirt off. And
yes.
He dropped a bunch of the speakers going into the Bottom Line, and he was a bit of a mess. A couple of times he phoned us, I need money for gas. I can't get the equipment there. So I told Dier that I think that the next few gigs we might need to consider a new roadie.
Yes, absolutely. And I think I was going to say, I'm glad you're staying together.
Lock in the golf tournament.
Yeah, we're going to lock it in.
What's the date?
That's my takeaway.
I think it's August
22nd.
August 22nd.
Okay, so send me the date and we will book it in. And for those, I hope the subprime guys are listening and
we'll
thinking about that.
We'll get them going for sure. Marley, you never heard them perform live.
No,
but the band's not breaking up.
Thank gosh.
I was going
to say you can have a solo career. Worst case scenario.
That'd be fun.
That's how the bands break up, though.
It is.
We don't want to do that.
No, okay, good.
It's like
good.
One Direction.
You don't need that. Well, there's lots. Justin Timberlake. There's lots of guys we could say, but let's go back to the broker journey,
Justin
okay?
Timberlake brought out NSYNC in a concert yesterday.
But actually, Paul, in the history of the band, you bring that up, in various venues that we've attended, whether it was on the broker side or the Salesforce side, I have gone up as a solo act with the house bands. So we were in Nashville, the band there asked me to come up. How part of the subprime journey started was a charitable contest for United Way. And we competed and we got screwed. We won, but they gave it to someone else. But having said that, they put us in the city finals, even though we didn't win at the Opera House, which was really cool for me.
That's a really cool experience.
You could appreciate this. That was the first time I'd ever performed where we actually had sound engineers front and side. That was pretty cool. I could actually hear what we were playing, which may have been an advantage or might have been a disadvantage depending on who you talk to. But one of the coolest stories I ever had was we were on a Salesforce trip and we were in LA and we rented out the Whiskey, which is one of the most famous rock bars in the world, and the house band there invited me up. And then we had them come up to Canada. They didn't have passports. They were all from Bakersfield in California. And we had them come and play a Vancouver event for us. And then they came to Toronto. And they jumped me into their band that night, they told me. So the subprime found out about that and said, hey, we got to get in on this.
That's right.
So we opened for them twice.
Wow.
They're called the Aviators. They were a real good rock band.
That's a really good name.
The Aviators?
Yeah, it's pretty cool. I think so. You want a pair of aviators?
I do not.
No?
Okay. You got it. You got to have that. It's a great look.
It is a great look, especially on Dan. Okay, let's get down to business.
You're rocking that suit with those Aviators.
Hey.
Oh, wow.
Hey, with the T-shirt.
They got that Tom Cruise vibe going.
Right? Wow. Have you ever been compared to Tom Cruise?
My
Who do you get?
most notable comparisons. We're just gonna throw that in there.
Don't get
number one. Post Malone.
Oh,
okay.
yeah, I can see that.
Big one for me. Jonah Hill. Big one for me.
Jonah
Hill.
Jonah
Did you watch Love Is Blind?
I'm going to give you Jonah Hill
like the girl
on
saying she
Jimmy
looks like
Kimmel.
Megan
I get that all the
Fox.
time.
Okay.
When he got mad at Jimmy Kimmel.
Don't tell me Teddy swims.
And this is Paul's most notable mentions for me. I have two. Okay. Billy Crystal.
I don't know.
Billy Crystal.
Do you know why though? Because you ever watch Analyze This and Analyze That? There's the Italian and Billy Crystal.
Okay, great. You're gonna love the next one. The next one is Danny DeVito.
Did you ever watch Twins?
Of course.
Arnold Schwarzenegger, Danny DeVito?
Yeah,
I knew you were going to say that.
And I'm Danny DeVito.
They were just co-presenting at the Academy.
They were. Max loves that one. Danny DeVito.
Paul, I'm not sure that those are valid.
I never
Who's
seen
John, what do you
Who's that
think?
guy
John?
from Wolf of Wall Street?
Jonah Hill.
Yeah, it's Jonah Hill.
Oh, yeah, that's him, right?
You know
Okay,
that
yeah.
you're here for
I
the
don't
social
know.
aspect.
Are you? Hold on. Are you trying to say that I'm Donnie Azoff?
No.
Yeah, he's Leo. He's Leonardo DiCaprio.
She's not saying I'm Leo.
No.
She's saying I'm Jonah
Okay, I
Hill.
think we're getting off track.
Yeah,
here.
sorry.
Let's get back to business here.
Okay, maybe I should ask the question.
Okay, go ahead, John. Go ahead.
No,
you go
ahead, John. Go ahead.
Well, I do. I mean, I think this goes to the heart of what we want to discuss today is partly the past and the future of the broker business in Canada. And we want to talk about lending and where that's going and what's happening in the housing market. And we can talk about all those things that are topical and discussed every day. But in addition to that, I think you asking me, what do I think? I'm more interested in why did you guys do what you do to enter the broker space, leave a successful Salesforce business at a major financial institution? Like what drove that decision making on your part?
Marley, why don't we start with you?
Oh, me?
Why'd you come to the broker space?
I guess it just to expand my business was a lot easier. With TD, you were kind of capped, especially with clients that buy a lot of investment properties. You're capped at a certain amount. So I felt I was losing more clients than I was gaining. And after speaking to Paul and Dan for a long period of time, I made the decision to jump over.
So how has that been for you, making that switch?
I definitely do like it a lot better. It did take some time to learn a lot of lenders' policies, but now, we have help around the office where you can just reach out and I'm sure somebody will be able to answer the questions, or you have your BDMs you can call and they're all really amazing that will pick up the phone and answer right away. So that was like my only challenge, was learning policies, but you can't learn it overnight. It comes with time.
Yeah, that's a big adjustment for Salesforce, particularly those that have been actively managed as well, because if they have an issue, someone will deal jockey. And when you go into the broker space, I always tell our Salesforce that are doing that, remember that you can't conduct yourself and think that you can be demanding and entitled, or that underwriter will just take your deal and put it to the bottom of a lender, because they don't know who you are. It's your first deal, your first 5 deals. You've got to establish a relationship.
For sure.
But the great news is, that you probably had a significant percentage of the apps that you received that the bank couldn't fund. At least this way, you can potentially
Shop
fund
around.
those,
Exactly.
and the commissions are higher and the revenue is greater.
Yeah, that is very true.
Dan, you can go next.
Thank you, Paul. I can share the same sentiment as Marley. I think that my departure out of the major financial institution could be somewhat similar to yours. In fact, it really boiled down to being able to process more applications. And my mother came to me after 2 years of me working as a mobile mortgage specialist under Paul. And she said, Dan, you've outgrown those pants. That's verbatim is what she said to me. She said, Dan, you've outgrown those pants. And she knew my relationship with Paul, and she knew how intimately involved you were in each other's lives, both professionally and personally. And for me to go to Paul and say, I need to leave because that's what's best for me, could have been one of the hardest things that I've ever encountered. When I had that conversation with him, I saw the future. And in seeing the future, he was a part of that future. It's challenging to give you one particular thing that forced me to become a mortgage agent / broker. But what I can tell you is that it's been the best thing that has ever happened to me in my entire life. And given my intimacy with SMA and other lenders, your own doing and what you've done to the broker community needs to be highlighted, respected, and multiplied for the rest of the mortgage broker lifespan. Like, I got a glimpse of what you've done as from Maple Trust to SMA, intimately, I would think. And I can't even explain to you the respect that I have for you and what you've done. Like, I can't even say it.
Well, you're very kind.
No, it's the truth. That's why we're a little nervous, and we won't jump too far ahead. My answer.
Yeah, I'm choking on my own words here. You saw something in this space that no one did, and I think a lot of the banks followed, and we'll dive into that before I answer or after I answer. So for me, it was three categories. Obviously, Dan, Janice, Miguel, who were all under my tutelage, all decided to join here. With them always saying, you're joining, you're coming. We see you as part of the future. If we backtrack, I was working in real estate secure lending at TD, and every year I saw the broker channel inching forward in terms of the share between them, the branch, and mobile mortgage specialists, right? So I saw it as the way of the future. I knew that at a certain point, this channel was going to take over. And to layer on to that, with the relationships that we have, and if we could bring over and create something special, because there is that stigma out there of the old school brokerage that, it costs a lot of money, or they're charging fees and it's transactional. For us here, and I think the really good brokers, and you know a ton of them, for us, it's about relationships. And we want the client to be happy. We do what's right for the client. Last year, everything has gone down because we were buying down rates as much as possible to win business, to do what's best for our clients, and we'll always continue to do that. But we are also able to own the journey from start to finish here. We weren't able to do that at the bank. And the last thing is legacy. We're here to build a legacy. At the bank, you tap out, whether you're, in my opinion, not so much in your role, but where I was, sure, I was a sales manager, you win awards, or as a mobile mortgage specialist, you guys are winning awards. But here to create this and just create something out there in the market that we think differentiates us from others was something that we really want to do.
That's why you're building your own business.
Correct. So I hope that was a good answer. Better than the first answer I saw you at the game.
It's a good answer. I think that I think you have to look at it when you're from your perspective at TD or at any bank. A couple of things have happened over the past 30, 35 years. Evolving technology, which has changed the business, not just from a process and fulfillment point of view, but from an origination point of view, obviously. And that had started when I was looking to create Maple. I was aware of the fact that brokers were one of the first intermediaries in financial services to actually use computers and automation. Actually, because of a program where Philogix came from, was originally owned by CIBC, and they sold it. So they had developed an opportunity to create a pipeline that brokers could file their apps, and they could do it in real time as soon as a realtor had a hot prospect, whether it was on the evening or the weekend. And taking a step back, my first lender was called London Trust, which was effectively a startup. And we didn't deal with brokers in the beginning. We dealt with them, but we didn't pay them. And in those days, typically the industry, brokers were doing much more B, very little A. We were doing a lot of new homes. And I encountered, for example, bank sales forces at all of the sites. And I saw that the mortgage specialists were using laptops. And so I said, that makes a lot of sense, because one of the challenges being at a building site, as people would walk in, the builders would want them at least qualified from a credit point of view, if not approving an app. And they had specialized teams, as you would have had at TD, that sat on those sites and dealt with that, right? And so I realized that was a distinct advantage to having to drive across communities or go into a branch in order to do your app or fulfill. That was not only inconvenient, but customers would get very impatient. I was doing credit checks for some of the builders, even if they were going to other lenders at these sites. And one of the things I realized was the borrower convenience was high, and then the speed of turnaround was the biggest factor. So I was charging a higher rate, but if I turned around the deal quicker, the rate sensitivity wasn't as high. So looking at branches at that time, we were going into all the subdivisions, and that's where branches wanted to locate, because the communities would be being built. They'd be young couples with kids, and they could go up the life chain, acquire them as first-time borrowers, and then as they pay down their mortgage and acquire wealth and all the wonderful things that happen. So all the banks were desperate to get sites. But what was happening at the same time in the branches, they weren't dealing with any new customers. They couldn't generate it. And I could see that sales forces and brokers were generating, even then, new customers. And that's only become more pronounced. So now branches, for two reasons. One, because of the tenure of the people that are in the chairs are less experienced. And as you know, mortgages have become very, very complex, particularly post B20, in order to understand. So if you're not dealing with them every day, it's very challenging. And in a branch, you're not, because you don't have a lot of new customers walking in. You're mostly dealing with existing customers that renew. And all of the banks have experienced that. So where are you going to get your growth from was the question I asked myself. Sales forces are very capable of generating growth, as you all know, because you've all been members of sales forces. But the challenge that I was witnessing was running the sales force. I could see that there would always be someone who was really developing well as a mortgage specialist, but then getting frustrated with the no being the final option. So they wanted the flexibility to be able to take that customer to another lender. And some of their reluctance had to do with the power of the brand. They thought that if you have the brand behind them, that would help them with credibility with the consumers, and I believe it still does. Yep. Also, they would have active management, people like you, Paul, that would, do the weekly huddles and coach and tell them how to do joint field work and call on realtors and develop your referral sources. Those are all really valuable training that the bank provides. And so a lot of the institutions struggled with this channel conflict. Does it come in the retail door? Does it come through the sales force? Come through the broker? And what I wanted to build at Scotia was to make it much more synergistic. So if I had a Salesforce member that decided to leave, I'd say 80 to 90% of the time when they went to broker, they sent us more volume through SMA than they did. So I that's why I developed a program where the Salesforce turndowns would go to our top brokers as a reward, because it was synergistic. And I think you see that evolution has just accelerated across the country, which is a big part of DLC's success. A big part of M3's success is that a lot of those Salesforce teams, once they've acquired enough experience and they see the opportunity, they go, look, I can make more money, have more flexibility, build some value in my own business. So that trend's continued, and that's why I think the share has grown. But you got to remember, and it's a great deal for the consumer because it's the lenders that are paying you the origination fee.
That's right.
For the customer, they're getting great advice, and it's not costing them anything, right? So I was looking at that model saying, how can that not succeed if what other consumer gets to go get financial services or product and they're not having to pay for that experience, right? And so I saw that as a model that was only going to continue to gain traction. And then technology and where people are at wanting things in real time, they want it instantly, right? They want their commitment back, they want conditions fulfilled, they want to be updated. And so that all had to take place. And the best place that the business that has responded, I think, the quickest to that reality was brokers, because going back to my original statement, they'd started having to submit all their deals typically through their computer at the time. But as mobile devices and laptops and iPads emerged, it seemed to me that we were going to be in a world where we would be fulfilling on our phones and tablets. And who was that going to benefit? To me, that would only enable brokers more and more, because most brokers are willing to work on evenings and weekend when their referral sources want to come in. And if you turn that deal around, and that's why for me, the value proposition for SMA was, where was the gap when I started way back when? Dealing with documents today, still in institutions, they take an app in and they will have one part of the process being fulfilled by an underwriter and then the condition fulfillment by another person totally separated from the process. I looked at that and said, that makes no sense. There's too many telephone calls, too much follow-up, should be one-stop shopping. So I wanted to have a system where that was integrated so that you as a broker sent the deal in, you dealt with one person, dealt with that person who had the judgment, the responsibility, the experience, was supported. And then also the funding relationship, because the back end has always been very challenging and still remains challenging today for all financial institutions. I wanted that funder to have a direct relationship with that underwriter and that broker, so that created a virtual triangle. And that's what I implemented at Maple. But the really special sauce on top of that was to compensate all the BRMs variably. And no one would do that. The regulators hated it. And why I thought it would work was because I looked at look-to-book and the closing ratios of all these FIs and other lenders. And it seemed to me there was not alignment between what you wanted as a broker and what the institution wanted, and particularly the underwriter. So I had the benefit when I got to the bank of proving it out, because we had lots of underwriting centers and they were processing a lot of apps, but they weren't very efficient. And I had a BRM in Calgary, for example, one BRM that did more business than the entire center in Calgary, which we eventually closed, and they had like 72 people there. So that I was able to expand that model of variable comp for underwriters for the sales force at Scotia, which has, I think, proved out as well. The challenge was regulators hate it because they think then for the money, you're going to be tempted to put in deals that don't qualify or even further because you're on a commission basis. So we had to build checks and balances. We built a pre-fund process, which now the bank follows regardless of channel. And we also had to bring in clawbacks and how we were actively managing and making sure we rotated the brokers. In order to do that, the first thing I realized was from going back to London Trust, dealing with brokers, and then we started paying them, was their quality control was really in the lender's hands. Most lenders think they have to take all comers, every broker. And when we started Maple, I realized, I stood up a focus group of senior brokers, put them in a room and said, if you were basically to put on a whiteboard the perfect lender for you as a mortgage broker, what would it look like? What would it do? And we went through that process, and I had a good friend of mine run the groups, and we had them actively engaged. And so twofold, what I did was I created a ginger group of senior brokers that bought into Maple Trust before Maple Trust even started, because they felt they were part of that enterprise because they helped define it, which was pretty radical at the time. Like lenders didn't want to bring brokers in. It was not an adversarial relationship, but there'd be a healthy tension, right? And then say we had 10 good ideas, 9 of them would have bankrupted me, right? So then it was a matter of what can we settle for? And one of the things was how are deals handled? And what's the response time? What's the turnaround? I'm so frustrated. And I'm still surprised that in the industry today that they have the BDM model. They want to come on, Dan, send us business. And then when the deal goes south, you call them and they can't even reach the underwriter. And it was so dysfunctional, right? And I didn't understand it. So I had to persuade the regulator. We have enough checks and balances. Let us try it. Maple tried it. It was successful. I think I'd hired 6 BRMs at the time, and I saw the deal flow and that it was working, and we were taking share, and then we could scale it up. When we got to the bank, it became scalable on a level I never imagined, like doing $30, $40 billion a year in the broker space. When I took this on, First Line was a dominant lender, and they had been purchased from Council Trust, a small trust company that I competed with at London, by CIBC. And that was their big inroad into the broker space. And they ramped it up. They were by far the dominant lender in the space. BMO was in the space at that time, didn't do much. Scotia had gotten into the space by buying Montreal Trust and picked up their broker business there. And just the way they got their Salesforce business, they did it when they bought National Trust. People were kind of running these businesses at the edge of their desk or trying to fit into, a very matrix-based large organization, and they weren't sure what was their purpose. So First Line put up walls, ran the broker business completely separate from the rest of their RESL, even system-wise. So the challenge then became, they wrote all this business, they weren't capturing the customer, there was no cross-sell. And they developed their points program for what we used to describe as trinkets and trash, and then their points program for buy-downs. And they were very successful, but when I went to price it, I didn't understand how they're making any money. The combination of their 2-point system and their aggressive pricing, margins, particularly in the spring seasons or the competitive seasons, were very thin. And I knew it would only be a matter of time that the Treasury at CIBC would start to ask the question, like the spread on the retail business is the widest because you're not paying any origination fee. The next wider spread should be on the Salesforce business because you're roughly at that time you're paying half what you were paying a broker an origination fee, and then the broker business. But what people didn't realize was the opportunity to scale that broker business. So as retail is falling off, as Salesforces not only have their limitations, but you can grow them and scale them. But as you grow them, you need 10 times more Pauls to run the business, right? There's all these fixed costs that get added on. So then the variable comp and the broker comp combined with the fixed cost of managing a sales force gets to be closer. So that the origination costs that you're amortizing over the term of the mortgage, it doesn't start to look like there's much difference on origination between the two when you get to a big scale. Then it is who's cross-selling. And in CIBC's case, they couldn't cross-sell. They created their own credit card, but they literally could not integrate into the system. Now, the people that were there tried, and it was just too big a project and too expensive. So they made this calamitous decision at the time as I was getting into the space. they got out of the space. Now, when I went in at Maple, I looked at First Line as the enemy. I looked at all the others as the opposition. So FirstNet, MCAP were big as monolines, but I was regulated. I've always run regulated entities, so I didn't compare myself to them because they had advantages that I didn't have, and I didn't want those advantages in order to run the book. But First Line I focused on. So I went after all the top First Line brokers myself and said, just try it. Try the service. Try it. And it was... it took a while because there was great loyalty to First Line at the time. Some of the legends in the business today will tell you that, they had very good experiences there. But having said that, our service model was better. We were quicker, we were faster. And as a result, we started to gain a lot of share. And then, fortuitously for us, I guess, CIBC made the decision to get out of the broker business. That really scared me because I was worried about the viability then of the broker space without a major lender. And that's why when Scotia approached me, I thought it was a good idea for a bunch of reasons, but particularly for the health of the broker space to get another bank back involved. And as it turned out, we became the dominant player, and we were in those circumstances, it seemed to TD that they should make the jump, and I think they did, as you know, and they're very pleased with the growth of their broker business. And then BMO has been talking about getting back in since they got out, and now they're getting back in, and while they're doing it on a stage basis, those are all good things to me for the broker industry, and suggest that it is going to be the dominant originator in residential mortgages for the next many, many years. I still think there'll be a strong role to be played by the sales forces. The branches will always have their role. Digital will continue to improve, so platforms like we developed the bank eHome will grow, but they'll never be it'll never be just purely digital in my view. It's got to be digital plus. As you know, it's relationship, but it's also advice.
Yep.
So you have to know what you're talking about. You have to do the best for your customer, not just rate, but the proper fit, whether it's term, product, whatever. And I think that the degree of sophistication in the broker space continues. And the proof point of what the opportunity in the market is, look at the phenomenal growth you guys have had as a business. Look how fast you've grown, how many agents you've added, how much volume you're doing. Like, that's phenomenal to me, that you have had the success that you've had in such a short period of time. It speaks to your ability to execute, and it is excellence of execution, obviously, but it's also, that's the future. You are the young lions that are going to take over the space.
Thank you. I've never had someone answer all my questions in one. Yeah, it was amazing.
Well, that's because you wanted to get to lunch.
You did. Well, absolutely, I do. So you summarized, and Maple Trust you opened in '89. Is that correct?
No, that was London Trust.
London Trust.
I vended London Trust into Maple Trust. Essentially, it was a regulatory. We already had the approvals, like CMHC approvals, all that stuff, but I was provincially regulated, so I transferred into federal jurisdiction, and they were requiring all the Ontario-based trust companies at the time to do that, like Home and the ones that were left, and they had to do it as well. And then I basically brought the staff that I had, and I sold all of the book to actually Home Trust, and we started with a fresh sheet. But London was a startup too. It was in the new home business, and so that was my experience. But London was a great education because I wasn't just doing residential mortgages. I was doing land, interim, takeout, commercial. I was doing a little bit of everything, as well as the residential mortgage book. And a lot of the loans I think that I was doing at London at the time probably would be described as B business today, because it was a higher yield, and it was mostly self-employed at that time who had lots of equity. They were buying an expensive Green Park house, for example, but maybe they were fibbing to the tax man or couldn't show proof of income, or the debt service didn't work, but they had built enormous equity in a very short period of time. So that was demonstrated to me two things. One, they had equity and security for the loan, but also they obviously had the ability to produce cash flow. And rates were much higher then, and more volatile. And I had, through the first real estate recession in our lifetime in Toronto was just at the beginning of the 90s. And I went through that. I got into the business just as the bloom was coming off the rose, but it was a great experience because any of the people that I had that were underwater and negative equity and all that, they all hung on. Like 90% of them made it through. So that indicated to me that Canadians are responsible borrowers, homeowners, they delight in home ownership. Every new to Canada person at that time that I came across wanted to be a homeowner within the first couple of years of being here. They were underserviced then. They're completely underserviced now. Same thing, the other great category were self-employed. That's who I was doing. New to Canada, self-employed, a lot of that because they couldn't prove the income at the banks. And now you've seen how all of those programs have migrated. And since B20, when I was leaving the bank, the big opportunity that I had not only thought of myself, but had been pointed out to me by some big players was, why hasn't the private lending market in Canada ever evolved to be what it is in the US? Why isn't it a big private player doing some of the A business? Why isn't there a securitization market here for that? There's lots of good reasons for it. But I think that as I was talking to brokers who were putting out increasingly a lot of their own money, and trying to understand what their goals and ambitions were and how it worked, and then watching how the credit unions got in and out of the market, try and understand why the mix were seemingly quite limited in their ability to grow. I thought if we could figure out a way to tap into that demand and bring the same value proposition that had previously demonstrated success in the B space, that we could scale it and build it. And that's the journey that we're on with Maple Financial, to try to build a national private lender for the deals that don't qualify, but they're still good mortgages.
So he had everything. Where he started, acquisition, why broker channel, what he's done for broker channel, what he's doing now, where he's going.
Let's talk a little bit more about Maple Financial. Maybe tell us a little bit about, you told us what you're trying to achieve. Where are you guys in the process? What's the goal? Where do you guys want to end up?
So, I think my view of where we are at and where we want to end up has evolved already. When I started it out, my first part of the journey was I started talking to some potential partners, investors, looking at some stakeholders that had an interest in the space, seeing what was happening with other people. And I guess I underestimated how balkanized and complex and how difficult it was, because there is nothing that you can really describe as private lending. It's all over the map. So on a continuum, it looks like this. There are institutional programs that you're familiar with, subscribed to by regulated lenders that do this stuff off balance sheet and do it to increase the overall spread on their portfolio. It always irked me a little bit that regulated entities were able to do this in their area of discretion, whereas I wasn't at the bank. We wouldn't have had a risk appetite for it, but even if we did, the regulator wouldn't have been happy to see that. Not because it would be so problematic from a credit point of view if there were delinquencies or defaults, but the reputational risk, right? So that's still a Scotia customer. Is there the suggestion that you gave them a loan that you knew they didn't qualify for and they were desperate, you took advantage of that? You never want to be in that circumstance as a lender. And so I was sort of thinking, how can we stand this up and what's available? And so I talked to brokers who were putting out money, and then I went to the ones that were deliberately to say, if I was to do this, you've been really good customers and partners for some of you as long as 30 years, would you be open to me soliciting to your agents? Because from talking to them, only a few people at the house get access to your private money. Your private money's limited, and you take the best. And then they're all asking me, they work for you, who are they using? They're using X, they're using Y. So they said yes, they would be open to that. And they said, what's it going to look like? I said, well, I don't know now. I got to find out what product type's available. I want to do it in a way that we can scale it and then securitize into the U.S. There are very few people that are national. They don't want to go into various jurisdictions, particularly Quebec, where there's huge opportunity. So I want to build something, stand it up. But to do that, you got to figure out where you can get the money from. So liquidity, number one. So Daniel, to answer your question, we've lined up some institutional investors that are going to provide the funding, and that's a journey. Signing agreements, getting all that done, then dealing with the ways and means. How are you going to do the deal? How is it going to be put to bed? How are you going to service it? So, you get signed up on Velocity, Filogix, you do all that stuff, but, you need a provider. So we're using Automator, which I know you're familiar with, and a really young, dynamic company that I'm very, very impressed with. And so we're working with them, and they've been very helpful to stand that up. And we've funded some deals, but it's a proof of concept now. It's a test and learn. And the reason for that is I've got to determine the credit appetite of those institutions, because they tell you one thing just like a broker, and you get back a different response, right? And I don't want to go to the market and overpromise and underdeliver. So to start with, for example, one of your pain points that you mentioned, we haven't launched, and I'm only going to launch with select brokers. That's always been the way that I've run the business. And we're going to introduce and ask you for your pain point on rentals. So we're going to say, give us your rentals, the ones over 4, that gap between 4 and 20, and all of those things. We're going to start with that. Small commercial pain points that I see that people have a hard time finding a home for, increasingly now, right? Because banks are not interested in investors unless they capture the entire household or have all their business, right? And, one of the challenges for a lender in that business is you get shopped a lot, right? So you're a Royal Bank customer, but you come to Scotia just for your investment properties, which doesn't make sense because the premium on investment properties from a spread basis isn't there. Right. So we're going to look at that gap, rentals, and as we go forward, we're going to expand that funnel. And I want to make sure that works. And we're going to add other institutions, getting other people to fund, and private individuals, because we don't want to lose the deals that the institutions can't fund. So high net worth individuals will run them like anybody else does on an investor program. They get to approve the deal, see if they like it, do they want the yield, typically 1-year terms and all of that. The institutions will do longer terms, right? So we're doing that. And that's, from looking behind the curtain, there are a lot of institutions you deal with that are dealing with other investors' money. It's not, and so for me, it was, okay, how do I navigate that? How do I, getting in front of the people isn't as big an issue for me because I am fairly well known in the industry and have a very demonstrative track record. So as a counterparty risk, I hope that people would suggest that, that I'm a safe bet and know what I'm doing. I have to tell you, the broker response to Maple Financial has been just overwhelming. And, you saw at the retirement party, that was just a tease. But, oh, my God, I got a flood of people saying, how come you haven't reached out to me? I said, I haven't reached out to anybody yet, right? So we're going to start to send out materials. You'll receive them. We're going to start slowly. We've hired the equivalent of a BRM and have more identified in the pipeline. So hopefully we can scale it up and build some good lending relationships. I know the demand is there. I also know if I can bring the same value proposition, the same kind of service to the private business that we were fortunate enough to do both at Maple and at SMA, that it will be successful.
We're excited.
The brilliance is in simplicity. It just is. Like, you're talking about the BDM model. They're selling you the world, but then the file goes in and it's a completely different story because the risk compass doesn't line up with what the BDM is selling. So ultimately, like as I'm listening to you, and this is almost like a repeat and almost a treat for me, truthfully, it's the brilliance is all in the simplicity.
Well, I think most things are relatively simple. There's lots of complexity, a lot of devil in the detail. Processes are always challenging. And I think that, in large institutions like where you work, banks are very good at refining process and developing process. What happens, I found in talking to all these other lenders that are involved, it's like somebody invented the lending paradigm in residential mortgages even before I started, and they're still caught in that paradigm. So they've made it through digitization, automation, they've made it better, but they've never stepped back to say, can we, I can't see the forest for the trees, because they get tied up in a process that still today, I look at people's process and the way they approach the market and how they do it, it doesn't make sense to me. I'll give you an example. In our pre-fund process that we developed to keep the regulators happy, busy times, pre-fund would have to sometimes become post-fund, but, we kept track of it. We demonstrated that the quality control was there. But having said that, we're stacking up people as we're doing more volume. And I said, let's automate some of this. So tell people, go away, come back with a solution. And they come back with a checklist, and we're going to automate that. And then I realized, but why are we still doing those checks? We got all these data points that show that 5 of those checks we did make no sense. We just did them to satisfy the risk guy or the regulator, but it has no bearing on the performance of the mortgage or the portfolio or how the borrower behaves. So I said, part of the challenge is you got to have enough of strategic vision to step back and say, not only do we look at the process that we have an improvement, but let's change it. Let's do something that's a little bit more radical and dramatic. The challenge in large institutions is you've got all these legacy networks that, you want to make a simple change and you think, brokers would say, why can't you change this? I say, because we got 40 other operating systems that have to be impacted, and it's hard to write a business plan to justify that. And with the beauty of this with a Maple Financial, it's like a greenfield thing. You can start on your tapestry and try to build it the way you think it should be done. So I'm very confident that model works and will work. I'm really pleased that the response of brokers is very, very strong. Like they say, we have a demand for this. In some cases, it's 10 to 15% of what they're doing in terms of volume through their business, particularly when it's become much, much tighter post-pandemic and people had gone from feast to famine. Their dependence on private lending went up and they had no way to access it. But then looking at it, it's not well run. Like none of it seems to me to have the value proposition that if I was a broker, what I'd want to see when I was sending in an app and what the response would be. And even looking at the product guides of all the products that you must look at, like there's so many variations. I couldn't make sense of them.
Yeah, there is.
Like, let's just make it simple, stupid, right? And say, this is what we're going to do. So have a little bit of hygiene in the product description, tell people what you expect, and then deliver on that. And being able to incent people, if I have an underwriter that it's being paid on the same basis of success as you, that alignment works. And the productivity will be there. Talking people into this proposition of the first part is always the difficult thing, right? Saying it's going to be slow, there's going to be bumps in the road, but you get a sense when you're on a journey like this, you can already see that there is a clear path that starts to, the more you meet and learn and educate yourself about what the challenges are in the space and where are the solutions and are there new solutions, I see nothing but opportunities, not just with Maple Financial to become a national private lender, but also to build a whole new platform. A platform where we could assist mix credit unions. I see the opportunity there to look at creating almost a marketplace in securities. I think there's an opportunity there to do a bunch of different things, bring in institutional investors. Obviously, we'll have to be a servicer to do that, but to say, look, you take the A piece, we'll get somebody else with a different risk appetite take the B piece, and maybe we take the C piece. But there are a lot of ways to make those deals much more palatable and pass the scrutiny of institutional investors. So I think that's underserved in the Canadian marketplace because we don't have a securitization market really to accommodate that like they do in the U.S. Once we can demonstrate to U.S. investors that this is a very stable platform, the response, I think, will be very strong.
I think the landscape of mortgage brokering and lending altogether is going to be very different over the next 10 to 15 years. And that kind of leads me into my next question for you, John. With your vast experience, your relationships, and your very good understanding of the Canadian marketplace, what are we seeing with home prices, rates? Where are we going? Where's the marketplace going to take us?
So we have a housing crisis. Everyone's aware of it. It's become may become the number one ballot box question in the upcoming election, housing. Whether, today there was a news report, Royal put out a piece through their economist that I think renters are up about 23% post-pandemic from pre-pandemic. So there's a squeeze there. We know what's happened with house prices, regardless of the fact that rates escalated in a pretty dramatic way with 20 increases from when we were effectively at the ultra low interest rate environment, and I've never seen anything like that in my lifetime. We went the other direction, and so that really stress tested the market, not only broker capacity but borrower capacity as well as borrower appetite. But in the same survey, and one that was put out yesterday, I think it said 73% of Canadians still want to buy a house. So that demand is there. We have a supply crisis. We can never build enough houses to meet the growth of our population largely through net immigration. And even if that slows down, we're still overwhelmed, right? The good news is on a political front, they're changing some of the very draconian and slow rules in order to get intensification approved and build more units and more dwellings. But you'll in your lifetime, we won't catch up, and you'll be overwhelmed by people looking for a financial solution to buy a house. That the brokers are best positioned, in my view, to take advantage of that. And it's complex right now. It's navigating what underwriting is like today is very, very complicated. It's increasingly complicated. The regulatory environment, in my view, is not going to change. It's not going to get like Trump gets in and says, okay, we're going to change all the regs, everyone go back to the Wild West. That's never going to happen in Canada. In fact, I think that you'll see that there'll be increased scrutiny. So my view is that brokers are a solution for that. You need someone who can understand what your particular challenges are, where there is the best fit. And I've always said to the brokers that I've dealt with, you need 3 good lenders, right? Like, don't just pick me and burn your relationships with those others, obviously, but don't do 5 and 10, because not just from a volume bonus point of view, but, underwriters are humans. And if you're not sending them enough business, even if they're not a variable comp, they don't like it, right? And I've witnessed this when you get in and out of the market, and deal flow starts to go to a new institution, well, then you like the new institution, and you're not so inclined to go back, right? So the best thing to be as a lender and as a broker is consistent. Have good relationships, make them consistent, be straightforward, and this market will make you successful.
I love it.
Are rates coming down?
Yes.
When?
Well, back half of this year, obviously. I mean, we're so much dependent on what happens in the U.S. economy because we're a taker that way. So, I mean, I think you see in Canada that inflation is not quite at the target rate, but moving certainly in that right direction. And so rates will come down. But, every job report, whether U.S. side, Canada side, people say, we're not sure. Inflation is an issue. And for us in Canada, it is problematic from one point of view that housing drives so much of that consumption and the economy. And I understand that all of the powers that be want to see more productivity, more real wealth gains. But you can't deny people who you bring here houses. They want to have them. Like, deciding that, well, you go be a renter. I haven't met anyone, a millennial or a new Canadian, who doesn't, if they can figure it out, have the dream of home ownership. And they got 2 hurdles, right? It's not just the debt service. A lot of them is how do you get the down payment, right? I know myself, when I bought my first house, I didn't have the down payment, and I was working for a lender, and the shareholders effectively lent me the money, but they knew where to collect from, so it was okay, right? But that was because there were no programs at that time, right? And so I know that, for my own kids, right, if they didn't have help with the down payment, then they're not in the market. But there has to be more and better creative solutions, because look at mortgage arrears, look at delinquencies. They're related mostly to unemployment. If you've got a pretty stable economy, you're going to have a portfolio that performs. There's enough credit rules and restrictions. There are very few irresponsible cowboy lending that goes on out there, right? So consumers are well served. Credit is done well in terms of there aren't going to be deficiencies. Not well from my point of view in terms of excellence of execution, because it's too slow, it's too sloppy, it's over-conditioned, it doesn't need to be that difficult. You don't return phone calls, you don't return emails. Those things make me nuts, right? And I think that's, hopefully, if I have a personal brand for brokers, they've seen that I have committed to that and delivered on that, and that's what I want to do with Maple Financial. And this is a narrower segment of the market, obviously. Like, how big is private lending? People ask me. Well, I say right now, it's more than 10%, maybe 15%, but it's increasingly significant part of the market. And that's a big market. That'll be $1 trillion market in Canada.
This has been an incredible episode. Honestly, knowledge, radical, bold. Those are words. Oh, yeah, we've been going, we're at 40, 45 minutes. We answered every single question.
You get paid by the
market, everything. He answered.
Max,
unless you have any other questions. He does.
Let's not going to go there.
And there's going to be so many snippets from this episode, and he's just going to jack up the price.
That's a matter of point of view, usually.
Yeah.
He gave excellence of execution.
How much you get on the side for the snippets of just Paul?
Here we go. Let's not go there again.
John, did you give him a little bit on the side too?
No, John's giving me every snippet. And he knows why we're called excellence of execution. He answered it himself.
Yeah.
A couple times.
You did answer it yourself.
Yeah, but you must see, you haven't been doing it that long.
No, we're. I'd like to think we're brand new. Like we haven't even scratched the surface yet. We're just getting to know everybody in the industry. Everybody's been extremely welcoming, and we're super thankful to folks like yourself. And we're really trying to prove ourselves before we ask for any sort of support. And I find that it's always served us extremely well. We've always come with the position of, let us show you what we can do, and then we'll come and ask you for your support, both from knowledge, time, effort, and SMA has been one of our most incredible partnerships, and we're super excited to be the number one supporter of Maple Financial.
Truthfully. Well, I think that there is, and I've discussed this, like, I really believe there is a generational change in leadership that's taking place in the industry, and that's overdue, and it's happening. And I think it's exciting because the energy, the thought, the commitment, it's long-term. It's not, I'm here for a quick buck. It's here to build value and make sure my customers are looked at. And, you and I were talking about it at the Leaf game with Darwich, right? You two guys, your companies are leaving everyone in the dust already. Like, I think that's fantastic. Like, it's a great thing to see, and it's good for the industry. And you must find that with the agents that you're recruiting, that they see how much success you've had relatively early, and they got to say, wow, something's going well there. And I think you'll continue to attract people on that basis.
After this episode, we're going to attract a lot of people.
I think that we show a lot of respect to the pioneers, I'd like to say, that have made the broker business what it is today, and that's from both a lender and broker capacity. I think the amount of respect that we have for the folks that you're thinking of at the top of your head immediately, that we lean on to say what you guys have done has been absolutely monumental, and we're going to carry that torch with all respect due, is just something that makes me so excited about this industry. And that's what allows me the opportunity to say that this is the place to be. This is where revenues are going to be generated for lenders. It's not going to be through their retail channel or through their sales force. It's going to be through the broker business, because the complexity of mortgage applications is just not what it used to be. Like Paul, when I started as a mobile mortgage specialist, told me that there's probably a circumstance where 10% of my business will be 2 T4s, ratios in line, pay stub, LOE, no debt, no hair, no nothing, submitted, auto approved. I don't even know if I'm at 5% today, or maybe 2%.
Yeah.
And it's complexity through the ever changing economic instability that we have today. And people are always looking for, should I become self-employed so that I could do something better for my family? And in fact, I'm making more money, but the lenders haven't evolved, right? And I think that evolution is coming through a fresh perspective like Maple Financial.
Yeah. Well, but it's also in your business, what I've witnessed is that it's all about presentation and packaging as well. Like, how many times have you seen a deal that was presented badly and gets turned down to be repackaged by someone who understood it better and presented the strengths as well as pointing out the weaknesses?
That's what we preach here.
But that's brokering, right? That the best brokers, in my view, can look at a deal and present it in a way that, credit people have a sense, the good ones, whether the thing is going to hang together or not, right? Or if you've missed some variables that might be problematic, right? But they can typically tell. But if you don't package in a way that when they get audited or risk or the regulator, that they can sell the decision making, then they get uncomfortable. And the difference between someone who is giving good advice, not just to the customer, but developing a good relationship with the lender, is understanding that and packaging it and not leaving out, essential details, or even details that aren't essential to make you wonder what else you missed, right? Or doing crazy volumes or just trying to blow one by. And what I always viewed, the 80-20 rule worked for us. Sometimes it was 25-75, but essentially, even when we were doing 30 billion plus, it was 500 brokers out of 15,000 that were providing that volume.
Wow.
Now, that doesn't mean, like when you say about the young and respectful and building these relationships. So as an illustration of that in Austin, you jump up on the stage and want to sing Country Roads and, and you don't know the words. What did I tell you? Like, go learn the words.
He sent me to go learn the words. Yep.
So did he?
I went up there, though.
He did. He got up there.
I went up there. And
A for effort.
And I was told by several people, not yourself, John, that has never happened.
Never.
Okay. I was a brand new broker. Okay. I got up on stage. I sang with the band. That's it. Now we can shut the episode down.
No, then when we went to Mexico for the conference,
inspired.
You wanted to do it again.
Yes, you did.
Greg was having no part of it.
Zero.
But if it wasn't for you, I wouldn't have been able to make that stage that night. So
myself and Oot, definitely, we're a big part of that, and we're super happy about it. I was singing, so our room, our room overlooked the courtyard. I was in my towel, overlooking the because I had to go upstairs and shower so I can get ready.
Floor.
I remember.
10th floor.
You saw me up there?
Yeah.
Singing?
Oh, yeah. Everyone saw you up there.
Excellent.
Right up the towel.
No, not that so much, but they saw him at the like we had the pool, and you're singing, and everyone's looking up, and they're like,
That's Dan.
That's Dan?
That's Dan.
I said, yeah, it's him.
We could have polished a bottle of whiskey at the bar before we left. Like, it wasn't like I was certainly coherent, but
absolutely you were.
You know what I mean? We had a great time. That was a great
time. It was a great experience.
I had a blast.
Okay, well, we could shut it down now, Paul.
Yes. Thank you so much for coming.
Sorry it took so long.
No, that was
fantastic.
Incredible.
Great.
Thank you.